Smriti Chaudhary, and this is Ask Profit. Like the name suggests, this show gets you answers to all of your stock-related questions.
Whether it's a short-term trading question or a stock you're thinking of adding to your long-term portfolio, you can ask the experts here and they'll tell you what you ought to do. You can speak to both of us live on any of our social media platforms or the WhatsApp number that's flashing on your screen right now.
And by the way, if you'd like to call us, that's possible too. It's the same number that you can call. Now, we have guests to talk to you, of course, and the experts to talk to you. But before we get to that, you've all been hearing about the Nifty 50 at all-time highs. And in fact, you've also heard about the number, that $4 trillion number for the exchange and the market capitalization on the exchange. What has the journey been like over the course of the last several months? And what are the stocks that have pushed us to this point? Hiral is joining in to give you some perspective on that. Hiral, what are you picking up?
Right. So, Alex, overall, it's interesting to see how India has now joined the $4 trillion mark. If you see in terms of India, it's the 5th country, and this is after US, China, Japan, as well as Hong Kong. Now, this is the fastest $1 trillion that you've seen because it's taken India just 2.5 years to go from $3 trillion to 4. But if you see from 2 to 3, it's taken India 4 years. And the first trillion, that's from 1 to 2, it's taken India over 10 years. So this is the fastest trillion that India has achieved. Now, moving on, if you see in terms of who are the dark horses and who are the champions over here who've helped us do so. ITC and RIL, not a major difference there, but you clearly see ITC at $32.98 billion. That's the market cap addition it's given to the 1 trillion. You have RIL followed by a Bharti Airtel, L&T, as well as a ICICI Bank. So interesting names here that we are seeing in terms of the top 5. If you see the next 5 as well, they're more interesting. Adani Power, Adani Enterprises, combined if you see is almost little over $42 billion. Titan NTPC, and you have HAL, which is an interesting entry that has come in over here as well. Now, that's what it looks like from a stock-specific perspective. Let's understand what sectors have contributed. Financial services, the top one, $174 billion addition is coming in from there, followed by cap goods, which is still in 3 digits. And the other 3 are auto, FMCG, as well as power. In fact, auto, after this addition, you have brokerages which are going ahead and downgrading the stocks as well. Very lastly, let's just quickly look at the dark horse. As we mentioned about ITC, the interesting fact over here is ITC alone has added a higher market cap to the $1 trillion versus the IT sector as a whole, which has just added $25.51 billion. So that's the dark horse we are picking up. And if you see the performance, negative returns over 8 years from April 2013 to May 2021. And in the last 2.5 years, the stock has more than doubled. So you know the performance that's coming in here. Moving on, another one, HAL. That stock has taken off also pretty smartly. 5 times returns to investors over the last 2.5 years. $16.84 billion of market cap addition that we've seen from HAL. And very lastly, let's pull up the other 2 which are on the radar. The emerging stars, Adani Group. Enterprises and Adani Power, $42 billion is what they have added to the 1 trillion. So interesting names over here. The key names like the IT pack, whether they will be able to play catch up or not. Names like a HDFC Bank, they are the ones which have lost market cap in this $1 trillion journey. Whether they will play catch up or not is what we need to wait and watch out for.
All right, so let's take some of those questions, Hiral, to our experts. We've got Avinash Gorakhshakar, who's Director Research at Profit Mart Securities, as well as Gaurav Bissau, who's Vice President of Incred Equities. Thank you so much to the both of you for taking the time for the first time on Ask Profit. Thank you so much for joining us. Let me start with the question on the Nifty 50 at 21,000. Of course, we've given up that mark, Gaurav, but where to from here? And what are you looking at in terms of the levels? Where is the support that is currently being seen?
Is that a question for me?
Yes, Gaurav, that's for you.
Yeah, good morning. Thank you for inviting and all the very best for a long innings ahead. And I'm very happy to be part of this journey. Coming to index, if you see overall, the structure has been very strong. There has been a vertical rally, so to speak, of in last few sessions, and after the outcome of state elections, it has been quite strong. There is a small undercurrent at 21,000 call writers. I'm not saying they are very aggressive, but yes, a psychological level as such. And if you look at the hourly charts or a lower time frame, you will see some divergences in RSI and prices. So at this point in time, we may see some consolidation. I'm not saying it's looking extremely weak, but some consolidation cannot be ruled out, and any declines towards the 20,500, 20,550, I think that can again spot levels can be a good buying opportunity. So whether we are talking about Nifty or Bank Nifty, we may see some upside.
Fair enough. Avinash, you've seen some of the key contributors over the last week. What stands out to you, and where, according to you, is that pocket of possibility or pocket of relative comfort when you talk about valuations?
No, I think first of all, Alex, congratulations to you, your entire team. It sounds very nice to be part of your channel and your growth journey from now on. Coming to the stocks which are relatively undervalued, I think a lot of steam is left in domestic themes. If you look at the domestic capital goods sector, the cement sector, for that reason, even the automotive sector, I think these are large pockets of opportunities. And yes, the PSU banks cannot be ignored. So I think, relatively, if you look at most of the PSU banks as compared to the private sector banks, there's a lot of value left, in stocks like SBI. In cement, we continue to like large cap players like Ambuja Cements. In capital goods, we still believe that Cummins is undervalued. So I think, markets are definitely going to be volatile. They're going to go up and down. But I think investors should focus on quality names and quality themes, where I think, comfortably over the next, say, 6 to 12 months, a reasonable risk reward can come in. Because at these levels, Alex, you have to be extremely selective. I think the markets have run up very sharply. And I think at these levels, whatever you buy has to be bought with a lot of conviction and with a lot of belief. So I think, these could be stocks where any mild correction should be used as an opportunity to accumulate. It's a buy on decline market. So I think these would be the themes I would be comfortable at this point of time.
All right, let's now quickly dive into the questions. The first one is on the defense stocks and is coming from Manoj Kumar from Noida. He writes to us and he says that he's interested in buying defense stocks. Now, we've already seen government approving about 2 lakh crore sort of acquisition projects, and they're going to put money into defense stocks. Coming to you, Avinash, first, what defense stocks are you looking at and are constructive on at this juncture that can be added to the portfolio?
I think defense is a very large multi-year theme. My sense is that despite the strong outperformance, I think, companies like Bharat Electronics, typically Hindustan Aeronautics, typically a Bharat Dynamics, even the marine companies like, Cochin Shipyard, or for that reason, typically something like a Muscat Dock. These are companies where I think any decline or correction can be used as an opportunity to accumulate. I think the best part is these companies are sitting on a 2 to 3 year kind of order book, so visibility is very strong. And more importantly, the government is now going to announce another Make in India, defense program for roughly about 2.5 lakh crores. So that would further add to the kitty of these companies. So I think you have got to take a 2-year view plus when you invest in defense companies now, because the run-up has been very sharp. But I think these 2-3 names definitely could add a lot of value, considering that they are market leaders in their own right, sitting on large order books, and the balance sheets are very solid. So I think, these companies definitely could be bought on declines.
Okay. We've got a question on SBI, State Bank of India. And this one also I'll take to you, Avinash, because we've got a viewer, Umang Chopra, who's written in from Jaipur, and asking, he's bought at levels of 338, so making significant money in this one. Should he sell right now is the question, because the worry is always, you've seen a run up. Do you want to book right now, or do you want to hold on with the expectation that SBI will really catch up with the rest of the market?
Alex, it depends on what kind of position he has. I think if he's got a large quantity, then I think he could actually book out some money and recover his capital, because he's got in very early, around 338, and now the stock is above 600 levels. But my sense is, with great growth in double digits, and plus with the kind of corporate capex expected over the next 6 to 12 months, and now with this 3-1 BJP victory, the government is going to focus in a very big way on infrastructure, railways, defense, and all that is going to require funding from the banks. So SBI seems to be very well positioned, is in a sweet spot. So our fair value is around 675, 680 here. So I think depending on what kind of quantity he has, he can take a call. But primarily, I think if he doesn't require money, he should hold on.
Okay, Gaurav, I would like your view as well on State Bank of India. We've got a viewers bought at levels of 338, so pretty early on in the journey to this point. The question is, should you take some money off the table right now?
Well, if you ask me, my honest opinion will be yes. So there was a multi-year, a 10, 12-year breakout at 360, 370, around levels which I had also recommended to a lot of these funds and our HNI clients. Some part of the target has already been achieved at 630, 640. So I would suggest that some part profit, at least the initial investment, that should be taken out and one can carry. Now, one also need to look at that. If you see the journey from 350, it has been a stupendous one. But if you see last 1 year, you will see that it has been underperforming the other PSU banks, whether we're talking about Canara Bank, whether we're talking about Punjab National Bank, Bank of Baroda, or the smaller banks like Bank of India or even Maharashtra Bank. So it has underperformed the other banks in the period of last 6 months or so. It has been stuck in the range between 550, 600. So on that perspective, yes, I would say only the investment part that should be booked out, and then one can carry, because this particular momentum can also take it towards 800 odd levels. So not exiting the stock entirely, but some amount of profit should be booked and then switch to some other stocks which are in the momentum.
All right, let's take up the next question. This one is on a media company, and we've seen quite a run up in the Nifty Media Index in the last couple of sessions. This one is from Neha Bansal from Jaipur, and she says she has bought 15 shares of PVR Inox at 2700 levels. Should she buy more shares? And she has a horizon of about a year. So Avinash, let me come to you first. PVR Inox, now we have seen quite some gains in the index as well. And if I look at the stock right now, it's up about 0.1%. So yeah. So how do you view PVR Inox fundamentally? And is it a good time to continue accumulating the stock?
Yeah, I think if you got a 18 to 24 month kind of time frame, PVR Inox is definitely worth accumulating, because see, in this business of the multiplex business, I think now PVR Inox combination will be like a monopoly player. More importantly, post COVID, the kind of inflow of movies which had stopped completely have now started coming, and I think there are many blockbuster movies which are expected in 2024 also. So my sense is that this is going to be a very sustainable business going forward, and they have several income streams apart from the food and beverage part. The kind of monetization which happens on these movies. So clearly, I think if you've got a 2-year view, I think one should definitely look at it, because this is going to be a very strong competitive mode for PVR Inox. There is hardly any new competition coming on board, and the supply and the sustainability of blockbuster films in the coming year is going to be quite significant. So I think you got to take a longer term call, because valuations are not cheap. But looking at the kind of pricing power and the kind of sustainability and the competitive mode, over the next, say, 2 years, a lot of wealth can be created here. You need to have a little bit of patience and conviction.
Okay, I believe that there are a lot of people tuned in on the YouTube live as well. We've got Amar who's asking a question about Bajaj Finserv, averaged at a price of 1600. Should he buy more is the question. I guess this one's for you, Gaurav. What would you say on the charts?
The charts are positive, and if you compare between Bajaj Finserv and Bajaj Finance, and I think at this moment Bajaj Finserv is looking stronger. This becomes interesting for me, because I also look at the relative strength studies. If you have a money and if you are buying outperforming shares, it has all the more reason for that. So it has a small breakout. It witnessed a breakout of 1650. I would not recommend averaging right away. Let it give a breakout. There's a bigger triangle pattern formation happening on the weekly charts, and a close above 1750 would open the gates for fresh lifetime high, and that can be the right approach, that you are averaging at higher levels, and then you have a higher confirmation of making money. So for me, that is more important. Or any decline, if you're getting of say 10%, 15%, and then you're averaging, that is fine. Not at the current junction. Either you average above 1750, or if there's a correction of 10-15%, that will be even more lucrative. And in my opinion, if there's a correction, that is going to be the last correction, and after that we can have at least 2 to 3 years of upside, and a very strong upside at that. So in my opinion, it is looking extremely strong. Can be bought at a little higher levels.
All right. There's another question on HUL, and we've got Amit Rastogi who's asking about this on YouTube, whether it can be sold at this juncture, or should you hold on from a long-term perspective? He hasn't shared his buy price, but would this continue to remain in your portfolio, Avinash?
See, I think as a core portfolio, Alex, if you got a very low price, maybe 2-3 years back, then I think one can consider to hold it. But if the investor has bought the shares just recently over the last 6 to 8 months, then I think in terms of relative returns, one cannot expect a significant upside and any big alpha creation here. I think a better bet could be a company like, say, Dabur or maybe Godrej Consumer Products, where I think the risk reward is much better than Hindustan Lever. I think in terms of the size of the opportunity and in terms of the pace, because finally, Hindustan Lever is a fully discovered stock. My sense is that there are other pieces of opportunity in companies like Godrej Consumer and Dabur, where I think the relative returns could be better. So I think my choice would be either Godrej Consumer or Dabur. Apart from HUL, of course, which is a very good long-term bet, but in the very near term, next 12 to 18 months, one cannot expect some sort of significant re-rating.
All right, we'll slip into a short break now, but we'll be back and we'll take up more questions. Stay tuned.
All right, welcome back. You're watching Ask Profit, and this is where we get all of your questions answered. We've got several questions on YouTube. We've got Priya, who's asking about Lemon Tree, whether it is overvalued or whether it can be bought right now. We've got Avinash and Gaurav to answer all of those questions. So, Avinash, I'll come to you on the valuation picture for Lemon Tree. This is a particular company in the hospitality space that's seeing a bit of a change in its business model that's underway. What would you say about the valuations, though? Is it a good buy at this current juncture?
Yeah, I think, Alex, most of the hotel companies need to be valued on a EV to EBITDA multiple basis rather than a P multiple basis. If you look at Lemon Tree from a P multiple basis, it may look expensive. But if you look at it from a EV to EBITDA multiple basis, that too from a 2-year perspective, I think the stock trades at around 10 to 12 times EV to EBITDA multiple. My sense is, the kind of locations the company is putting up new hotels, specifically Tier 2, Tier 3 markets, and basically budget hotels. There's a great and a very big opportunity for the company to grow in this segment. They may not operate in the premium segment, but the middle and affordable segment is one area where Lemon Tree is very dominant. So I think, if the investor has got a 2-year kind of time frame in mind, the current levels can offer decent returns, provided, the investor is willing enough to put in at least 18 to 24 months here. very good brand, and definitely numbers are improving quarter on quarter.
Next up, we have a question from Sandeep. He wants to know about Tata investment. Now, they have not mentioned if this is for the longer term or a short term trade, but we have seen quite a run up in Tata investment before the Tata Technologies IPO hit the indices. Let me come to you, Gaurav, on this. Tata investments. What's your view? How do you view? Do you suggest holding on to this stock? And is it a good buy at this juncture if you don't have it in your portfolio?
The first part of your question is easy to answer, that whether one should be holding, then an answer would be yes. If somebody has a horizon of say 12 months or 15 months, then it makes good case to hold on to. We have seen multiple breakouts, multiple swing breakouts as well. The rally has been a vertical one. One can keep filling stop losses and one can keep holding the stock. The trailing stop loss would be around 3,600 and one can hold on. As to the second part of the question, that whether it's a good buy at the current junction, then I would say no. We have seen very strong upside already. There's the RSI on the monthly chart is at the level where we generally see some profit booking or at least consolidation, which is trading around 81, 82. So I would not recommend buying fresh. There are better stocks that are giving breakouts or reversals. You rather play with that rather than something which has already moved up 4-5x in a short period of time. So fresh entry, no, but if somebody's already bought, can ride for more upside.
We've got Marut who's joined in on WhatsApp, and he's asking about Devyani International, which he's bought at levels of 125. He's got 500 shares, and he's asking about the longer term space because he's held on for 2 years already, and the stock is currently at 188. Should he continue to hold, Avinash? What's the view on this one?
We should continue to hold. See, within the QSR space, Devyani runs the KFC franchise, and basically it's a part of the Varun Beverages group. So I think in terms of their scalability and the geographic location, I think there's a good amount of growth potential over the next 2 years. In the last 2 quarters, there has been some significant competitive pressure by which margins have come off. But overall, the volume opportunity is very large, and I think considering the track record of the promoters in running Varun Beverages, I think the QSR space is something which holds a lot of promise. So if the investor can hold for the next 12 to 18 months, I think definitely good risk reward can come in. So I would suggest to hold.
Okay, fair point. We've got a viewer from Kochi. We've got Krishna Kumar who's joining in. Thanks so much, Krishna, for writing in to us. And his question specifically is about UPL. It will be out of the Sensex, he points out, and I'm guessing he picked this up on our platform as well, on the 18th of December. In this context, is there any bearing that it will have on the flows and therefore on the stock? Anything that you want to add on flows and on whether or not moving out of an index has a bearing on the stock price? Avinash, do you have a view on this?
No, I think, my guess is United Phosphorus is a great company, but I think it got impacted badly because of heavy inventory, pile up in the agrochemical sector, specifically the domestic market. So I think even as of now, the company has lost the season because typically most of the agro companies in India, April to September is the peak period. So probably, if the investor can hold on for the next 12 to 15 months, because we have been getting a lot of ground reports that now inventories in the system have got cleared, things have come back to normal, and probably from next year onwards, all the agro companies should bounce back. So I think at these levels, United Phosphorus looks very attractive, but I think you need to give in a time frame of at least another 12 to 15 months when numbers actually spike up to better numbers than what they recorded in the previous 2 quarters. So I would say that it's better to hold. One could expect a decent upside once we get numbers for the next year, that is for FY 24-25.
Very quickly, we've got the first caller on this particular program. Amin is joining in from Jalgaon. Amin, quickly tell us what your question is.
Good morning, sir.
Good morning. Tell me what your question is.
Sir, I have purchased a Tata Power on 330 price.
Mm-hmm. And how long would you like to hold it for?
It's for short term, but maybe I thought it's give me some profit in intraday. So is it suitable for intraday or not?
Okay, fair point. Gaurav, quick answer to that question. It's a short term trade.
See, for short term, if he's looking to buy exit on intraday, then yes, it can be a good time to book out some profits. But if somebody can hold on for say 6-7 months, then some more upsides up to 10-15% cannot be ruled out. We are getting fresh swing breakouts. So, in my opinion, if somebody can hold for some more time, at least few months, then definitely one should hold. But if somebody wants to play for 1 or 2 days, then I think it's as good a time to book profit.
All right. Well, I hope, that answers your question, Gaurav, as well as Avinash. Thank you so much for joining in and answering all the questions you did today. We're completely out of time because we're right before the press conference of the Reserve Bank of India's Governor, Shaktikanta Das. That's coming to you in just a couple of minutes. Do stay tuned. This is NDTV Profit.